Well, happy Monday, Maverick Traders. This is Rob Reinhold, and here we are, Monday, October 17th. The market actually came into the day in a good mood. Remember, last week we had 4 out of 5 down days, and we gave back a lot of the gains we had on Friday, and we closed at our lows. So the market was very pessimistic at the end of this week, and when the futures opened up on Sunday night, they were actually positive, and they climbed all throughout the night. So it was just in a good mood. Now, why is the market in such a good mood? Has anything changed? Is inflation better? No, not at all. Is the war in Ukraine any better? No. Is the prices of gasoline and commodities any better? No. But here's why the market went up today. There was no bad news. Now, I know that sounds silly, just for the market to go up, let's see, 2%, 2.5% on no bad news. But that's really where we are at this market here. No bad news actually gives us a little bit of a bounce. And frankly, we actually got a little bit of bad news. We got a manufacturing number this morning that was worse than expected. Now remember, we're in a period of time where good news is bad news and bad news is good news. This weak manufacturing number actually gave the market a little bit of a boost because it's showing that the economy is slowing and maybe the Fed doesn't need to be as aggressive. So for the day, we had the Dow up just under 2%, S&P monster gain 2.6%, NASDAQ 3.4%. And again, this is just a really good, solid week. Oil flat, gold flat. 80% of all stocks went up that day. That is a very strong up day. If we take a look at these charts, we can't really say that today was anything because today was an inside candle. The high of today was below the high of Friday. The low of today was above the low of Friday. This is an inside candle. So it doesn't really tell us much about the momentum. However, if we take a look at the candle, it actually is much more bullish than bearish because, as you can see, we have a green body, but we also have this long lower shadow. So at one point during the day, this actually almost sold off to go negative, and it actually recovered. And you can see just a really nice bullish candle here. It doesn't mean anything until we break out above this 370 area on the SPY. But at this point, I'm going to give this like a 60-40 as far as bullish bearish here. It's a little bit more bullish than bearish, but the fact that it's an inside candle, it doesn't really give us any real clear signal. If we take a look at what happened in the VIX didn't come down all that much. So for the market to jump 2.6%, 3.5% on the NASDAQ, the VIX typically will come down 5 to 6% whenever we're going to move like that. The VIX is very stubborn. So it's telling us there's still a lot of uncertainty out there, a lot of fear. It's definitely not giving us the all clear, everything's good signal. Again, we talked about the VIX. Every time it gets up to this 32 to 34 area, this is typically where the market starts to try to bottom out and try to go a little bit higher. The heat map today was just all green. Very, very bullish here. Look at Amazon, Tesla up 7%, Microsoft, Apple 3 and 4%. Big gains across the board. And you can see there's really not anywhere that outperformed anywhere else. Everything was just a sea of green. So if we take a look at our outlook here, we were at a -2. So we're at a -2 for the week. We're at a -2 for the month. We are hitting our head on that 20-period moving average. This 20-period moving average is going to be very, very key. If we can close above the 20-period moving average and then above that 370, we have to look at that low and say, okay, that was likely a short-term bottom, and we're likely to trade up until we get a bear rally. If we do not break above that 20-period moving average, the next move is still to the downside. Still lower, probably retest that low at 350 and break through it and make some lower lows. We still have to stay bearish. Even though the market has definitely become less bearish over the last couple days, the charts are still telling us to be bearish. Once we go above the 20 MA, then we'll go to a -1 and we'll say, okay, we're just maybe not as bearish as we were. We're going to have to wait until the technicals show us to be bullish. We're just going to be backing off of our bearish outlook if the market goes any higher. Let's take a look at some potential trades here. With today's inside candle, I don't really feel like sticking my neck out. I'm still waiting to get a little bit better indication of where this market is going. But let's go through a couple of the trades we discussed in the trading room over the weekend. We had a bullish trade on Gilead, G-I-L-D, in the healthcare sector, one of the sectors that have been holding up quite nicely recently. We had a pretty wimpy bullish trade here on Gilead. We talked about doing the 64 of November and then selling the 67 of October. So this trade is doing exactly what we wanted it to do. We didn't think it was going to rocket higher, but we did think it was going to hold nicely. So a diagonal call spread is a great little trade to throw on. 67 is going to be our max gain point. And if it just hangs out in this area, it's going to be a nice profitable trade. And then on Friday, we need to decide what to do on the trade because that short option is going to expire. And we need to decide, are we going to hold the November 64 calls? Are we going to sell another diagonal for next week? Or are we going to exit the trade out altogether? This one is doing exactly what we want it to do. We just want it to stay up around the $67 area. We also talked about a sideways trade on Chevron. Oil was basically flat today, and you can see that the energy stocks were up a little bit overall. Chevron gapped up and then sold off, but still closed up for the day. The call we had on this one was a straight butterfly, not a targeted butterfly, but basically we think it's going to stay between 150 and 170 with 160 as our main profit point. So again, the risk graph on this is going to be like this, and 160 is going to be our max gain price on this. Now we just have this on for a week, so this will expire on Friday. So this will be a fairly quick little trade here. And if this stock just hangs out in this area, it's going to be a very nice payoff on just a sideways trade. On the bearish side, we have NLY, Annaly Capital. This is a mortgage, REIT. And you can see we got an inside candle today, so nothing triggered, but we are looking to enter this on a short position. Nothing triggered. We have an inside candle. We're just simply waiting. If we get a candle that is red and lower than the previous day, that's going to be our trigger. But you can see this is a pretty disappointing candle on a day where the market ripped higher. This is what we like to see. When you're looking at a short position, if the market rallies higher and yours underperforms the market, that's a good sign that it's going to stay relatively weak. So just waiting on this one to trigger. And I think we had a pretty wimpy trade on this. I think we had a 16-17 bear call spread. So just a $1 spread on this. And the last one, Newmont Mining. Also went up today. We're looking for this as a short. We're looking for this one as a diagonal put spread. It's basically going to be like this. And $40 was going to be our max gain point. Same thing, just for 1 week. For 1 week, buy the November 45 puts. Sell this Friday's October 40 puts. As long as it stays down here in this area, it's going to be a nice little gain. If it plunges, okay, we don't make as much. And if it rallies up, we get a little bit of cushion because we are diagonalized here. This one has a negative candle today. Yes, it closed up for the day. There are more sellers than buyers giving us a red candle. That's exactly what you want to see on your bearish trades that you're looking for. You want to see red candles on big green up days. That's telling you it's likely to underperform. Let's wrap this up and talk about tomorrow's outlook. This inside candle doesn't give us a ton of new info. The fact that it did hold in is a plus, but it didn't hold in and run and build on last week's rally. It just held in. That's all it did. It just held in those levels. So we need to look for more things, but we can't ignore that it was a green candle and we closed much closer to the high than the low. My indication is that we're likely to see a slightly positive open tomorrow. We need to clear that 20 period moving average and close above it before I get any sort of bullishness in me. Because right here, right now, is nothing more than a bear rally until I'm proven differently. Tomorrow we have industrial production. That's not really going to be that big of a news. We do have lots of earnings. J&J, Lockheed Martin, Netflix. Netflix after the bell tomorrow. That's really going to set the tone for the communication services sector and for technology. So Netflix is really the first big tech company to come and release earnings, and you can bet there's definitely going to be some movement for it. So if you're trading in tech stocks or communication services, understand there's likely to be heightened volatility on Wednesday. That is it for the Market Roundup. Thanks for joining me. Goodbye, everybody.